And then the third thing that people have to know about this morning is a corporate story, and that has to do with Amazon doing its first stock split in more than 20 years, a 20-to-1 split, and authorizing another $10 billion share buyback. Now, the company did some splits back in 1997 following their IPO. They did 3 of them, in fact, in that period, and then they took a long pause, a long hiatus from doing stock splits, but some of their rivals have been doing them, and the stocks have been doing better, not necessarily as a result, but you see their Amazon shares over the last year. If you look at the likes of Alphabet and Apple and Microsoft, which have announced some splits, those stocks have been doing better. So it's interesting here, the contrast, if you will, between them and what this could potentially do. You know, analysts will tell you it's mostly sort of psychological here, that people see the stock now as more affordable, even if they can buy fractional shares anyway. But still has to be approved, by the way, by shareholders for this to go through. But that would take effect in June if it does indeed happen.
I indeed liked your Amazon stock split history lesson, Professor Hyman. You are, in fact, correct here. Amazon has done this before, but it is really interesting to see this because they're essentially saying to this next generation of retail investor that has joined the market over the past 2 years, come and get involved in our story. You can buy our stock at a cheaper price. And this comes at a time where Amazon, a couple weeks ago, when they reported earnings, they signaled to Wall Street, to investors, that they're going to start curtailing a little bit of how much they're investing in their platform after an aggressive year of investments last year. Ultimately, that could be a big tailwind to Amazon's profits. And then, of course, its stock price.